Hello everyone, welcome back. Just when I thought we might have a slow news day, we don't, because Strive just announced a bombastic strategy regarding Bitcoin accumulation. Strive Asset Management is not merely introducing a new financial strategy, it is redefining the architecture of corporate treasury management in the 21st century. Strive is executing a reverse merger with NASDAQ-listed asset entities to become the first publicly traded asset manager-led Bitcoin treasury corporation. The objective is clear: maximize Bitcoin per share, outperform Bitcoin's own native return, and enforce Bitcoin as the capital hurdle rate. To achieve this, Strive is deploying a multi-engine financial model. Number one, a Section 351 tax-deferred Bitcoin for equity exchange, offering a legally compliant vehicle for accredited holders to contribute Bitcoin without immediate tax liability. Number two, a cash discount acquisition strategy targeting companies whose market value trades below net cash. And three, an institutional grade leverage platform using derivative structures and fixed income overlays. This is systemic optimization, converting the structural inefficiencies of the fiat economy into a self-reinforcing Bitcoin accumulation flywheel. Most companies seeking to go public face a long, capital-intensive path through the traditional IPO process, but Strive is bypassing that entirely via a reverse merger, securing immediate access to a live S3 shelf registration. This provides instant liquidity optionality, allowing the company to raise capital via debt or equity without delay or regulatory lag. The merger is not a shortcut, it's a strategic acceleration. It enables Strive to act on opportunities in real time, which is especially important in Bitcoin cycles where supply-demand dynamics shift rapidly. Where traditional IPOs spend 12 to 24 months preparing to participate in capital markets, Strive will already be operating at scale. At the core of Strive's initial treasury formation is a Section 351 exchange, a provision in the US tax code that enables investors to contribute property, including Bitcoin, to a corporation in exchange for equity, without realizing immediate capital gains. So this is a one-time limited opportunity structured with legal opinion letters and strict compliance standards. It allows accredited Bitcoin holders to rotate into Strive equity at fair market value with no markup or premium and no taxable realization event. Strategically, this is a superior alternative to ETF exposure because it's direct, it's tax deferred, and it's yield generating via capital optimization. If fully subscribed, which I think it will, the Section 351 exchange will position Strive among the top 7 corporate Bitcoin holders globally. This represents not only a large absolute Bitcoin position, but a structurally accretive one. With 10,000 Bitcoin off the bat, Strive will instantly impact the supply side dynamics of the Bitcoin float. This is capital reformation at scale, kids, transforming a balance sheet from a fiat liability sink into a deflationary reserve standard. Strive's second core engine is its cash at discount acquisition strategy. Over 30 billion in US public companies currently trade below net cash. These firms often lack productive capital allocation strategies despite holding liquid fiat. Strive is targeting these companies, acquiring them below their intrinsic value, extracting the stranded cash and converting it into Bitcoin. So each deal becomes a self-funding Bitcoin ETF proxy using capital from inefficient public shells to build strategic Bitcoin reserves. This not only accelerates Bitcoin per share growth, it also removes misallocated capital from the system, tightening float and reinforcing the scarcity thesis. The third and most sophisticated layer of Strive's model is institutional leverage overlay. Chief Executive Officer Matt Cole brings a $70 billion fixed income pedigree to the table. He's structured and risk managed complex portfolios for a really long time. This expertise enables Strive to deploy collars to reduce downside volatility, prepaid forward contracts to synthetically accumulate Bitcoin exposure, and credit overlays to extract yield from debt markets and recycle it into Bitcoin. This is the evolution of the strategy model, using balance sheet engineering not just to acquire Bitcoin, but to do so without equity dilution or headline leverage risk. It's a sophisticated framework that aligns treasury risk, capital efficiency, and Bitcoin accumulation in a structurally superior way. Strive is not only innovating in treasury strategy, it's restoring shareholder primacy in corporate governance. Its activist engagements have already reshaped compensation and policy frameworks at firms like AMD and Motorola, removing bonus incentives and recentering on shareholder return. That same philosophy is now extending to treasury policy. Strive is going to use its activist voting power to pressure portfolio companies to allocate reserves to Bitcoin, or justify in economic terms why they continue to hold inflationary US dollars. This is a new form of monetary activism where value preservation is no longer just a slogan. The future of capital governance will be led by cold, rational decisions about time, scarcity, and capital retention. In addition to capital markets expertise, Strive possesses a rare asset for a financial institution: a native digital distribution engine. Through its merger with asset entities, Strive inherits a media stack with over 2 million social media followers, a 200,000 member Discord community, and more than 1 billion platform engagements in the past 90 days, all achieved with zero paid advertising. It's a vertically integrated, attention-based funnel for investor education, capital aggregation, and Bitcoin onboarding. As ETFs and funds compete for institutional flows, Strive operates with an always-on retail channel capable of influencing the financial behavior of the next generation. This enables an organic flywheel effect. Social content drives investor participation, which then accelerates equity demand, which then funds further Bitcoin acquisition, creating a reflexive, shareholder-aligned growth loop. Strive's structural advantage stems from its identity as an asset manager, not a tech company or a holding vehicle. That distinction is fundamental. Asset management produces recurring fee-based revenue that is non-cyclical, scalable, and largely immune to the operational risks that affect other sectors. This revenue can be reinvested strategically and opportunistically into Bitcoin. Unlike some other Bitcoin-aligned firms that must liquidate in order to cover expenses, Strive is net accumulative by design. Its model resembles software as a sales in terms of cash flow stability, yet it benefits from financial optionality and capital flexibility unique to regulated finance. This gives Strive the rare ability to buy Bitcoin during weakness, not strength, avoid forced sales due to market drawdowns, and preserve BTC per share value while scaling exposure. It's a flywheel of monetization, accumulation, and preservation, well suited to a volatile macro regime. Perhaps the most important philosophical innovation in Strive's framework is its treatment of Bitcoin as the capital hurdle rate. Traditionally, corporate capital allocation is evaluated against the weighted average cost of capital, a backwards-looking metric dependent upon interest rates, debt levels, and equity assumptions. In contrast, Strive measures all investment decisions against Bitcoin's expected long-term return. This creates radical clarity. If a project cannot beat Bitcoin, it does not deserve capital. If a strategy underperforms Bitcoin, it is automatically inefficient. Bitcoin's enforced scarcity via its fixed 21 million supply becomes a disciplining mechanism across every decision point. This tool transforms Bitcoin from a passive balance sheet line item into a governance tool, a non-negotiable benchmark that restores fiduciary rigor. Capital is no longer deployed on narrative, hope, or forecasts. It is measured against the hardest asset that is known to the markets. Now, there is a competitive benchmark known as MicroStrategy. Michael Saylor and Strategy have established the first blueprints for corporate Bitcoin accumulation at scale with over 555,000 Bitcoin and a refined equity and debt strategy. MSTR became the de facto proxy for Bitcoin exposure in the public markets. Strive builds upon that foundation while addressing its structural constraints. First, by using Section 351 to acquire Bitcoin tax deferred. Second, by executing roll-up acquisitions of fiat-rich companies, thereby converting cash into Bitcoin without direct share dilution. Third, by integrating a professional derivatives overlay to enhance exposure without expanding the float. The result is a higher velocity system, more Bitcoin per share, lower marginal dilution, and enhanced flexibility to respond to market conditions. Strive does not seek to replicate MSTR, it seeks to evolve the category, adding professional asset management infrastructure and strategic capital markets access to drive performance. In short, MSTR pioneered the concept, but Strive is industrializing it. The United States, through Section 351, has inadvertently become the only jurisdiction in the world where individuals can contribute Bitcoin to a public company without triggering capital gains tax. No equivalent exists in Europe, Asia, or other developed markets. This provides the US with a unique regulatory arbitrage opportunity to become the global on-ramp for corporate Bitcoin liquidity. Strive is the first company to explicitly operationalize this advantage, creating a compliance pathway for large-scale institutional Bitcoin onboarding. The implications are profound. Cross-border capital flows will seek US equity structures that allow Bitcoin conversion. Sovereign and corporate players may increasingly rotate fiat reserves into public companies executing this model, and over time these flows will erode the credibility of companies with fiat treasuries and accelerate dollar debasement from within. Section 351 is a sovereign-grade incentive structure for Bitcoin monetization, and Strive is the frontrunner in exploiting it. Strive's model is aggressive, but it's not reckless. It's built with risk architecture at its core. Several key risks have been identified and preemptively mitigated. IRS scrutiny on the 351 swaps, that's been addressed through pre-filed legal opinions and limited time windows to reduce interpretive risk. Market NAV dislocation is going to be managed via option overlays, steady fee revenue, and disciplined capital allocation. And the complexity of acquisition rollups is controlled by a very experienced board and executive team with decades of mergers and acquisition experience and post-merger integration. Strive is not operating like it's a high volatility crypto firm. It's functioning as a precision engineered capital markets entity with legal, operational, and treasury safeguards built in. Its model is bold, but it's fully institutionalized, regulated, and measured. The next phase of Strive's journey involves moving from strategic design to operational execution. They need to close the merger and expand the shelf registration to $1 billion plus, ensuring liquidity and financing capability. They need to launch the Section 351 exchange portal, the digital gateway, for accredited BTC holders to rotate into the structure, tax deferred. They need to execute the first cash at discount acquisition, converting stranded fiat into productive Bitcoin reserves. They need to deploy fixed income overlays to add Bitcoin exposure without equity issuance. And they need to commence a national and global roadshow to institutional investors, CFOs, family offices, sovereign funds, framing Bitcoin as the new cost of capital. This is much more than a capital raise, folks. It is the emergence of a new financial entity category, the Bitcoin native public corporation, engineered to outperform the fiat incumbents and sovereign bonds by design. For capital allocators, for investors seeking performance, discipline, and structural superiority, Strive is the model to watch.